So the news that Allbirds co-founder Joey Zwillinger is out as CEO effective this past Friday came as a surprise to some, but not to anyone who's been watching the increasingly daunting trend of C-level executives who are just fired after poor short-term performances. But this is a trigger-happy mindset by publicly traded boards that is spreading out of control. The modern business maestro finds themselves in a peculiar pickle. It's a grand reflection of the pressure cooker environment demanding instant gratification, immediate results that's measured in quarters, breeding a culture of nowism that undermines long-term growth. And this culture spins a revolving door of C-suite bigwigs, especially CMOs, faster than a DJ spinning at a rave. I call this the tyranny of the quarter, because short-term thinking erodes long-term growth. Everyone from the Wall Street Journal to Harvard Business Review has highlighted the disconnect between market expectations and stagnant company growth. Investors throw roses at companies courting long-term innovation with the promise of lower capital costs, right? Yet the siren call of quarterly allure often shoves innovation out of the way. The pressure is particularly acute on CMOs. Now, a study by DHR International in 2022 found that the average CMO tenure was a mere 4.1 years, but it's far less in big companies. Another study by Russell Reynolds Associates found that the average tenure of a CMO at major consumer brands has plummeted to just over 3 years. And if a CMO's marketing initiatives fail to drive immediate revenue growth or boost shareholder value in the short run, they're on thinner ice than a polar bear in summer. This constant churn just disrupts marketing strategy and hinders building brand loyalty. Opting for quick thrills with aggressive marketing stunts or flashy deals might pump sales temporarily, but it leaves the brand's reputation looking like it went 10 rounds in a UFC fight. So the impact of short-termism goes beyond individual careers. It stifles innovation and long-term investments in areas like R&D and just broader marketing overall. Now, businesses become hesitant to invest in projects with delayed returns, even if they hold immense strategic value. And that can lead to a decline in overall productivity and competitiveness. Now, the broader economy also suffers from this myopic focus. Short-term thinking discourages investments in infrastructure, education, workforce development, all of which are crucial for long-term economic prosperity. Now, another report by the Conference Board found a correlation between short-term executive focus and lower levels of capital expenditure. So that just weakens a nation's long-term economic growth potential. This is why companies like Nike and Starbucks are shuttering programs like their Web3 experiments, right? Odyssey and the Dot Swoosh programs, respectively. Once they go a little bit stale, instead of figuring out how to make them bigger and better and incorporate them into the bigger ecosystem that would actually benefit everyone, they shut it down. We yap about innovation, yet this overarching vibe puts like a straitjacket on us. And once companies realize how much they're overspending in AI and that investment compared to the financial impact that it may have, we could see the next wave of executive bloodbaths. The litany of corporate scandals from Enron to WorldCom to Wells Fargo, this serves as a cautionary tale of what can happen when short-term thinking trumps ethical decision-making and long-term sustainability. So how do we break free from the tyranny of the quarter? Well, one solution lies in changing investor expectations, encouraging a focus on long-term metrics like customer lifetime value and brand equity. That can incentivize companies to invest in strategies that yield sustainable growth. Also, fostering a culture of long-term thinking within the C-suite is vital. Boards of directors need to reward executives who demonstrate a commitment to building a future-proof business, even if it means sacrificing some short-term gains. Ultimately, a shift in perspective, it has to happen. Business success shouldn't be a sprint, but a marathon. By prioritizing long-term strategies and fostering a culture of innovation, companies can create sustainable growth and contribute to a more robust economy for everyone.